Here's a quote I keep coming back to. If SEC approves, your position fires. That's not a headline. That's the exact logic behind a conditional order on Polymarket And here's what feels almost illegal to know. Most crypto traders have no idea this feature exists. While everyone else is watching BTC charts and refreshing Coinbase feeds, a small group of forecasters has already pre-positioned across ETF markets, regulation contracts, and on-chain outcome predictions, all set to fire automatically when a trigger hits. Today I'm showing you the full setup. If-then logic, price triggers, market resolution triggers, a real live example with a crypto contingency trade. You don't need any prediction market experience. I'm starting from first principles. By the end of this video, you'll have the tools to set orders that execute themselves while you sleep. Let's go back to basics. A standard order on any prediction market is simple. You find a contract priced at 40 cents. You decide that's the right entry point for your thesis. You submit. It fills. Done. A conditional order adds one critical layer. Instead of executing immediately, the order sits dormant. You define a condition, a trigger, that must be satisfied before the order runs. That trigger can be a price movement on this market, or it can be the resolution of a completely different market. Think of it as a standing instruction to the platform. You define the logic once. PolymarketTrade monitors the condition continuously. When the condition is satisfied, the order fires automatically. This matters enormously in crypto, where a single event, a Binance enforcement action, a spot ETF approval, a halving era hash rate milestone, can ripple across dozens of related prediction markets inside minutes. Conditional orders let you pre-position for the cascade before it happens. Here's why this feature is built for crypto specifically. Think about the last major catalyst, an SEC ruling on a spot Ethereum ETF, a Coinbase quarterly earnings surprise, a Binance regulatory settlement, or a DeFi protocol hack that moved stablecoin depeg markets. What happened on prediction platforms? They repriced instantly. Within minutes, sometimes within seconds, the probability on related contracts shifted 10, 15, 20 cents. If you're watching manually, you miss it. You refresh the page, and the entry point you wanted is gone. Conditional orders break that pattern. You do your analysis in advance. You decide, if crypto regulation resolves yes, I want a yes position on the BTC spot ETF approval market at whatever price it lands at in that moment. You set that logic once. When the trigger fires, you're already in. No FOMO. No missed window. This is event-triggered trading, and it's the most underused edge on any prediction platform I've seen. Let me show you exactly where to find it. Let's get into the interface. Open PolymarketTrade and go to any active crypto prediction market. I'm using a BTC spot ETF approval market for this demo. On the right side, you'll see the order panel. At the top, there are tabs: Market, Limit, and Conditional. Click Conditional. The condition builder loads beneath the standard price and size inputs. You'll immediately see two trigger type options. First, Price Trigger. This watches the current market's own contract price and fires when it crosses your threshold. Second, Market Resolution Trigger. This is the more powerful option. It monitors a completely separate market and fires your order when that other market resolves a specific way. Both fields start empty. We'll fill them in step by step. One important note before we continue. Fill in your target order details first, which side you want, your size, and your limit price. Then define the trigger condition. That order of operations makes the preview screen much easier to read. Price triggers are the simpler of the two, so let's start here. Select Price Trigger in the Condition Builder. A price input field appears. Type your threshold. Here's a concrete example. The NO contract on a crypto regulation market is currently priced at 45 cents. You think that's too high? Your analysis says it should be closer to 28 cents after the next SEC comment period closes. You don't want to buy at 45. You want to buy at 28. Enter 0.28 in the threshold field. Then select your direction, drops to or below. Now set your order size and limit price as you normally would in limit mode. Finally, set your expiration date. This is critical. If the price never hits 28 cents before expiration, the entire conditional order cancels automatically. You are never stuck in an order you no longer want. Pick an expiration that aligns with your thesis timeline. If you're watching a Q2 regulatory decision, set expiration for mid-Q3 to give it room. That's the complete price trigger setup. Now the advanced trigger, and the one most people don't know about. Select Market Resolution Trigger. A search field appears. Type the name of the market whose resolution will fire your order. Let's say you're tracking a market called, will the SEC approve a spot Ethereum ETF by June 2026? Search for it by keyword. Try Ethereum ETF or spot ETF. Select the correct market from the results. Now choose the resolution outcome, yes or no. Choose yes, and your conditional order fires the moment that ETH ETF market resolves yes. Choose NO, and it fires on a NO resolution. This is if-then prediction market logic in its purest form. You're using one market's resolution as a trigger signal for entry into another. The on-chain reading is, you believe ETH ETF approval changes the probability landscape for BTC-related contracts. So you pre-position the BTC side conditional on the ETH catalyst. Set the trigger market. Choose the outcome. Your target order waits in standby. Here's the real example. The topic is a 2024 election contingency, but I want you to hear the logic because it maps perfectly to any crypto thesis chain. I want to buy NO on a general election outcome market, but only if the primary resolves in a specific direction, because that changes the entire probability structure for the general. In the condition builder, I set the trigger market to the primary election winner prediction. I select yes, meaning fire my order only if candidate A wins the primary and that market resolves yes. In the main order fields, I set up a NO position on the general election market with a limit price and a size I'm comfortable with. The order sits dormant. If the primary resolves yes for candidate A, my NO position on the general fires automatically. If the primary goes any other way, my order never triggers and cancels at expiration. Now replace this with a crypto sequence. Having confirmation triggers a staking yield market entry. A Binance regulatory settlement triggers a DeFi protocol probability. An on-chain hashrate milestone triggers a BTC price contract. Same exact mechanic. One resolution informs the next entry. Before you confirm, the platform shows a full preview of your conditional order. This is the most important screen in the entire flow. Take 30 seconds here. The preview is divided into 3 sections. First, the trigger condition. It shows the trigger market name and the specific outcome, yes or NO, that will activate your order. Read this line twice. A yes trigger and a NO trigger are opposite instructions. One wrong click here, and you're positioned backwards when the catalyst hits. Second, your target order details. Side, size, and limit price. Double-check the size. Conditional orders execute without a confirmation dialog when the trigger fires. If you entered the wrong size, you will not get a chance to fix it in the moment. Third, expiration. Make sure your deadline is past the expected resolution date of your trigger market, not before it, otherwise the order auto-cancels without ever having a chance to fire. When all 3 sections match your intent, confirm. The order is now live and dormant. Once confirmed, your conditional order lives in the open orders section of my activity. It looks similar to a resting limit order, but carries a trigger badge summarizing your condition. Status cycles through 4 states. dormant while waiting, triggered when the condition is met and execution is processing, expired if your deadline passed without the trigger hitting, and canceled if you removed it manually. You can cancel any time before it fires. Hit cancel on the row, the order disappears, no position is opened. If the trigger fires, execution happens at your limit price or better, and the trade appears in recent fills just like any other completed contract. One practical note for crypto traders specifically: when a major catalyst hits, an ETF approval, an SEC ruling, a Binance announcement, markets move fast. If the contract you're targeting has repriced significantly above your limit by the time your trigger fires, your conditional order may not fill immediately. It will rest as a standard limit until matched. Build a few cents of buffer into your limit price to account for post-catalyst volatility. That's the complete walkthrough. Conditional orders are the highest leverage tool on PolymarketTrade, and almost nobody uses them. You set the logic once. The platform monitors continuously. When your condition hits, you're in, whether you're asleep, watching on-chain data, or tracking BTC mempool flow. Price triggers for technical entry points. Market resolution triggers for thesis chains. Crypto regulation cascading into ETF markets, having signals flowing into hash rate forecasts. SEC actions rippling through DeFi protocol probabilities. Here's where I'd start. Pick one market you already have a view on. Set a price trigger 5 to 10 cents below the current contract price and see how it feels to have an automated entry waiting for you. When you're comfortable, move to the event trigger logic and start chaining markets like a macro forecaster. The link to PolymarketTrade is in the pinned comment below. My Telegram channel runs daily signals on crypto prediction markets, also linked in the pinned comment. Subscribe if you want to follow high probability setups in real time. See you in the next one.